Today, July 17th, 2025, the crypto markets are buzzing with activity, and all eyes are on Picoin. It's a significant day for those involved in the Pi network, as we take a snapshot of its current market position. Let's delve into the numbers and understand what they mean for the diverse community surrounding this cryptocurrency. We'll explore the current valuation, its implications, and the factors influencing its perceived worth. Picoin sits at 44.16 cents. This figure represents the approximate value of Picoin as reflected in the IOU markets. It's a fluctuating number, subject to the ebbs and flows of supply and demand, and overall market sentiment. Keep in mind that this valuation is based on trading within specific platforms that allow for IOU trading of Pi. This price is the consensus value from recent IOU trades on various exchanges. These exchanges facilitate the buying and selling of Pi IOUs, which are essentially promises to deliver Picoin once the official mainnet is launched and coin transfers are enabled. The price discovery process on these platforms provides an early indication of the potential market value of Pi. For new investors, especially those just entering the world of cryptocurrency, understanding this price point is crucial. It's the entry point, the cost to acquire a single Pi coin, or rather an IOU representing a single Pi coin, on these specific exchanges. It's the initial investment required to participate in the potential future of the Pi network, with hopes for future growth. The expectation is that, as the Pi network matures and its ecosystem expands, the value of Picoin will appreciate. While 44 cents may seem small, it's important to consider the potential for exponential growth in the cryptocurrency market. The price alone doesn't reveal if Pi is cheap or expensive. A comprehensive analysis requires a deeper dive into the project's fundamentals, community engagement, and long-term vision. It's just a benchmark for tracking performance. This price serves as a reference point against which future price movements can be measured, allowing investors to assess the effectiveness of their investment strategy. For millions of pioneers who mined Pi on their phones, often with minimal effort, this price represents a tangible validation of their participation in the network. Seeing any real-world value, even in the form of IOU trading, is a milestone. It signifies progress towards the ultimate goal of establishing Pi as a viable and widely used digital currency. For traders, both seasoned professionals and newcomers, this price signals active interest and speculation, creating opportunities for short-term gains and strategic positioning within the market. The volatility associated with IOU trading can be attractive to those seeking quick profits, but remember, these are IOUs, not the official coin, and trading them carries inherent risks. Adding risk. The value of these IOUs is entirely dependent on the future success and launch of the official Pi coin. Every buyer believes in Pi's future. They are betting on the long-term potential of the Pi network and its ability to disrupt the digital currency landscape. Every seller may be taking profits or hedging against a drop, mitigating their risk exposure in the face of market uncertainty. Your journey with Picoin starts with this number. It's the first data point in your personal analysis, a foundation for all further analysis. From here you can begin to build a comprehensive understanding of the Pi network, its technology, and its potential. It's the anchor for understanding trends, market fluctuations, and the overall direction of Picoin's perceived value, risks, and rewards in your investment decisions. Always remember to conduct thorough research and exercise caution when dealing with cryptocurrencies, especially in the context of IOU trading. Let's delve into the concept of trading volume, a crucial indicator for understanding market dynamics. Trading volume represents the total amount of a cryptocurrency, like Picoin, that has been traded during a specific period, typically measured over 24 hours. It's essentially the pulse of the market, reflecting the level of interest and participation. Picoin's 24-hour trading volume is nearly $100 million. This impressive figure indicates a substantial amount of activity surrounding the coin. This is a significant amount, a sign of strong market activity. A high trading volume suggests that there's a lot of buying and selling happening, which can have various implications for price stability and investor sentiment. High volume means many buyers and sellers, all actively participating in the market. This increased participation can lead to tighter bid-ask spreads, making it easier to execute trades at desired prices. This increased liquidity makes it easier to trade without big price swings. When there's ample volume, large orders can be absorbed without causing significant price disruptions. For investors, this signals liquidity and market health. It suggests that the market is functioning efficiently and that there's a healthy level of interest in the asset. Low volume, on the other hand, can be risky. It can indicate a lack of interest or uncertainty in the market. With low volume, you might struggle to sell without dropping your price. This is because there are fewer buyers available to absorb your sell orders, potentially leading to slippage and losses. PI's high volume shows it's not forgotten. It remains a topic of interest and active trading within the cryptocurrency community. This indicates there's real, global engagement. People from all over the world are actively trading and participating in the Pi coin market. But volume alone isn't good or bad, it's simply a measure of activity. It's important to analyze volume in conjunction with other indicators to get a complete picture of the market. It reflects activity, which can be driven by a variety of factors. These factors include news, rumors, which can quickly spread and influence market sentiment. And of course, speculation, which is a major driver of activity in the cryptocurrency market. Rising prices on high volume suggest confidence. It indicates that buyers are willing to pay higher prices, confirming an upward trend. Conversely, falling prices on high volume signal strong selling pressure, suggesting that sellers are eager to offload their holdings, potentially leading to further price declines. Remember, these are IOUs representing a promise to deliver Pi coin in the future. They are essentially bets on Pi's future, not the actual coin itself. This distinction is crucial to understand the risks involved. If you're considering Pi, it's important to do your research and understand the underlying technology and market dynamics. Know you're joining a dynamic, fast-moving market, where prices can fluctuate rapidly and unexpectedly. Always invest responsibly and only risk what you can afford to lose. To gauge a cryptocurrency's scale, look at its market capitalization, price times circulating supply. Market cap lets you compare projects beyond just coin price. A low-priced coin with billions in circulation can have a huge market cap, limiting growth potential. For Pi coin, calculating market cap is tricky. The circulating supply isn't fully confirmed or liquid. Most Pi coins are locked, and IOU trading is based on future claims. Any listed market cap for Pi is speculative. Treat it with skepticism. Once Pi's open mainnet launches and supply is clear, market cap will be a more reliable measure. For now, use the formula as a lens to compare value and size in the crypto world. Pi coin's price, like any asset, is driven by supply and demand. Limited supply and high demand push prices up, excess supply or low demand brings them down. Pi's current supply is artificially low. Most coins are locked, awaiting KYC and Mainnet launch. This scarcity on IOU exchanges can inflate prices. Pi's maximum supply is 100 billion coins, but only a fraction is tradable now. Demand comes from millions of miners and speculators betting on Pi's future. News, partnerships, or delays can quickly shift demand and price. A fixed supply creates digital scarcity, a key value driver. The current price is where supply meets demand in this unique, evolving market. Understanding these forces is crucial for any crypto investor. Crypto prices are famously volatile. Double-digit swings in a day are common. The market is global, runs 24/7, and is still maturing, fueling wild price moves. News, rumors, and influential tweets can send prices soaring or crashing. Emotional trading, fear, and greed amplifies these swings. Crypto markets have lower liquidity than stocks, so big trades move prices more. For Pi coin, volatility is heightened by its speculative IOU status. Its value is tied to future expectations. Any update on mainnet progress can trigger sharp moves. This makes Pi a high-risk, high-reward asset. Volatility is part of the crypto experience. Be prepared for the ride. Comparing Pi coin to established cryptocurrencies gives perspective. Bitcoin is digital gold, scarce, decentralized, and proven. Pi has a much larger supply and aims to be accessible for everyday use via mobile mining. Ethereum introduced smart contracts and a vast dApp ecosystem. Pi hopes to build its own but faces tough competition. Projects like Stellar focus on fast, cheap payments similar to Pi's vision. Dogecoin's success came from its community. Pi also relies on a massive, engaged user base. Pi's unique mobile mining and distribution set it apart, but its technology remains unproven. It's challenged transition from idea to a secure, functional, decentralized network. Success depends on delivering real utility and building a thriving ecosystem. Getting started with Pi coin is different. It's not like diving into the established world of Bitcoin or Ethereum. The approach is unique, designed with accessibility in mind, and it all begins with understanding how Pi coin is mined. You mine by tapping a button in the mobile app. It's a daily ritual, a simple action that contributes to the network's growth and your own potential holdings. This ease of use is a core principle of the Pi network. Mining Pi isn't about buying on an exchange, at least not yet. You won't find it listed alongside other cryptocurrencies on major trading platforms. This is because Pi network is still in its developmental phase, focusing on building a strong foundation before entering the open market. This approach aims to make crypto accessible to everyone, regardless of their prior experience or technical knowledge. The goal is to democratize cryptocurrency, making it a tool for the masses, not just a select few. This inclusive model ensures that participation isn't limited by resources or expertise. You don't need expensive hardware or specialized skills to contribute to the Pi network. All you need is a smartphone and a willingness to engage. Building your security circle helps secure the network. These circles are groups of trusted individuals who vouch for each other's authenticity, creating a web of trust that protects the network from malicious actors. Pi network prioritizes trust over raw computing power, differentiating itself from traditional proof-of-work cryptocurrencies. This approach is more energy efficient and environmentally friendly, aligning with a sustainable vision for the future of digital currency. Completing KYC or Know Your Customer is essential. It's a crucial step in ensuring the integrity and security of the Pi network. Without it, your mined Pi can't move to the mainnet. KYC verifies your identity, preventing fraudulent activity and ensuring that only legitimate users participate in the network. KYC has been a bottleneck, with many users experiencing delays in the verification process. This is due to the high volume of applications and the need for thorough vetting. So patience is key. The Pi network team is working diligently to streamline the KYC process and ensure that everyone can be verified in a timely manner. The Pi you mine now has no direct spendable value. It's essentially a placeholder, a digital asset that will gain value once the open mainnet is launched. IOU prices are speculative and should be approached with caution. These prices are not based on any real-world utility or trading volume within the Pi network itself. These IOU prices are not endorsed by the core team. The core team has repeatedly warned against participating in these speculative markets, as they carry significant risk. True value will only be realized after the open mainnet launch, when Pi can be freely traded and used within the Pi network ecosystem. This is the moment everyone is waiting for. Until then, keep engaging with the app and community. Participate in discussions, contribute to the ecosystem, and stay informed about the latest developments. Manage expectations. Pi network is a long-term project, and its success depends on the collective effort of its community. Progress is slow, but the vision is ambitious. The Pi network aims to create a truly decentralized and accessible cryptocurrency for the world. The journey is about building, waiting, and contributing to a shared vision. It's about being part of something bigger than yourself, and preparing for what's next. The future of Pi network is uncertain, but the potential is immense. Approach volatile assets like Pi coin IOUs with discipline and caution. Never invest more than you can afford to lose. Crypto is unpredictable. Do your own research, don't rely on hype or influencers. Understand the difference between Pi's enclosed mainnet and open mainnet, and the risks of IOU trading. Consider dollar-cost averaging. Invest small amounts regularly to reduce risk. Prioritize security, use reputable exchanges, enable two-factor authentication, and never share your private keys. Be wary of scams and unsolicited offers. In crypto, you are your own bank. Protect your assets. Make decisions based on knowledge, not emotion. Responsible investing is your best defense in a volatile market. Picoin's current market shows huge potential and big uncertainty. The price and trading volume reflect strong interest and speculation, but the real test is yet to come. We've seen that price volume and market cap all matter, but context is key. Pi's future depends on a successful open mainnet real utility and a thriving ecosystem. For pioneers, the focus is on KYC community and patience. For traders, caution and research are essential. Pi's story is still being written. Success isn't guaranteed, but the ambition is clear. For now, Pi stands as a symbol of the quest for a more accessible